Welcome to the Titans of Industry show. As I'm recording this interview, gold and silver are correcting hard, as well as general markets, as well as the mining stocks a little bit here. And with that backdrop, I wanted Brien Lundin, one of the premier precious metals analysts, investors, and newsletter writers, to give us his take on what's going on after the incredible rally we've enjoyed. It's funny, silver is the best performing asset for Q3 and the worst performing asset of September. So it's been quite volatile for silver and for gold as well. Brien, thank you for coming on the show again.
Great to be with you again.
I want to start off with gold and silver, obviously. And as we're doing this, gold has come down from its peak in late August, come down hard. Silver's done the same thing. What are the important technical support levels for both of the metals to watch out for?
Well, that's interesting. You know, it's the technical story that has been driving or dragging gold down. But literally, as we speak, the gold's up about $23-24 today. So it just goes to show some of the volatility that we've seen in the metal. My view has been there's two narratives at play and kind of fighting against each other in the gold market. The short-term narrative, the narrative that took gold down, was that we weren't getting any more headline help, that the world was looking a bit rosier for gold, and that gold had failed to advance and was breaking some technical levels that were presaging a further decline. Key among those was a nearly perfect head and shoulders pattern that gold completed a few sessions, or a session or two rather, before the big sell-off that took it well below $1,500. And that head and shoulders pattern pointed to a correction that would be down in the 1,400 to 1,425 level, which would be probably healthy for the long-term view of the market, but certainly distressing to investors over the very near term. The other narrative is the longer, more fundamental monetary argument for gold, that we're going to have kind of in spite of, or kind of because of the broadening economic slowdown, but more generally because of the need of the markets around the world to feed their addiction to easy money, that we were going to have a continuation of ever easier central bank monetary policy, and in fact, probably negative real rates on interest rates for literally forever, because we cannot have interest rates higher than the rate of inflation anymore because of the large debts that we have. We couldn't afford to service those debts. So there's a larger, longer term fundamental narrative at play, and there's a shorter term, more trader-oriented play, where a lot of these short-term traders, trend followers that have gotten into gold, suddenly abandoned ship as the metal's upward momentum kind of waned. So right now we're in the middle of that. You know, we had some headline help over the last day or so. We've had the dollar go down a bit, and gold's popped back above $1,500. Still, there's that technical picture out there that's going to get the short-term traders probably jumping in on the short side. So I don't know where it's going to end up over the next couple of weeks, but longer term, over the next months and years, I think the bullish picture for gold is tremendously powerful and will remain intact.
Let's talk about the very long term. So there's a ratio between the Dow Jones and gold. It has been called the most important chart in investing in the 20th century, or should I say in the last 100 years. It has had 6 cycles, so its cycles are very long. Right now, it's been expanding since 2011. So the Dow is outperforming gold since 2011. But these moves are about 15 to 20 years long, usually, like I said. Do you believe that the Dow Jones to gold ratio has peaked? Because it has come down substantially, meaning that gold has been outperforming the Dow, or do you think that there are 5 to 10 more years here that the Dow will actually outperform gold? Doesn't mean that gold will go down, it just means that the Dow will outperform it. So
Yeah,
What do you think about? Sorry, what do you think about this whole situation?
I think that the days of the Dow significantly outperforming gold are over, but I don't think that necessarily means a very severe or steep decline in the Dow. I think it more speaks to the fact that gold will rise as a counterbalance. What's really inflated financial assets, and that's everything from equities to real estate prices to even bond prices over the last 10 years, and in the case of bonds, 30 years, has been this ever easier monetary policy from central banks, so that every economic slowdown is met with a deluge of liquidity from central banks, lowered interest rates, always ratcheting ever lower, and just a flood of money, of liquidity into the markets. So how many of these cycles we're going to have before fiat currencies in general, the dollar in particular, completely lose their credibility? I don't know, maybe 2 or 3 more cycles. But I do know that we have entered another cycle of monetary easing, and we're already so low in interest rates, and we already have injected so much liquidity into the markets that the next reaction is going to be fairly deep into the negative zone on interest rates and levels of quantitative easing that far exceed anything done previously. So we're entering another one of these cycles that I think is extremely bullish for gold. Getting back to your point, this monetary easing that has previously inflated equity markets will probably do so again. So this return of easing by central banks will actually be bullish for equities as well. I do think, though, that gold will outperform equities in this run, and therefore that ratio you're talking about will continue to fall.
Adjusted for the 1980 way of measuring inflation, the nominal all-time high for gold is about $2,400. At the same time, in 1980, when gold hit 850 an ounce, it was enough to cover the entire U.S. currency supply. If you want to repeat that process in today's world, gold would have to be around $18,000 in U.S. terms just to cover the U.S. currency supply. Do you
Yeah.
believe that this is where the fiat monetary system is going towards, an accounting period, so to speak, where gold again covers 100% of the monetary supply? It right now covers only 7% of outstanding dollars. So what is the take that you have on this?
I think eventually, again, I don't know whether it's going to happen this cycle or the one after or the one afterward, but I think that at some point the world is going to look at this flood of currency that comes in on every economic slowdown and say that these fiat currencies have lost all credibility, and gold prices will be much higher at that point. Somewhere down the road, they have to find some kind of an anchor on currency issuance to restore credibility to currency in general, and gold is the obvious choice for that. But the numbers, if there was 20% coverage, and I think you need to look at the U.S. dollars in existence worldwide, and if you do that, a 20% coverage would imply $10,000 gold. But you're talking more like $50,000 gold at a 100% coverage. So I don't know if we'll ever get to 100%, but I do know also that there's going to be a lot more dollars created as we keep going through these cycles. So that number will continue to grow. The bottom line for investors right now is not to try and overthink precisely what the path will be to get to those levels or where it will end up, but just to know that we're on that path. We're going along that path. And for sure, the one thing we're certain of is you're going to want to own gold and silver as we enter these stages and go further down this path.
Brien, what is your strategy with regards to selecting investments in the mining sector, and how many mining stocks do you own at any given time?
I own probably, I don't count, I haven't counted for a while because it's really kind of embarrassing, but I probably own about 40 to 50 different companies in some level. Some of these, after this long bear market being very minimal, ownership levels in a lot of different names that have yet to be jettisoned, as it were. But I do focus on the area personally. I focus on the area through Gold Newsletter. And we cover about 30 stocks in Gold Newsletter in our portfolio. And the strategies really, they vary, because in the early stages of a bull run, the junior resource companies that have established resources, some often and typically with some level of economics applied to those resources, they're typically very undervalued and they move very quickly. They can double or triple in the first months of a sustained move in the metals. But then again, you have the exploration stories that come about really at any point in the cycle. But as a cycle extends and more money comes into the sector and more companies get um, to put money into the ground and explore for prospects, and there's more interest among junior stock investors, then you see the exploration plays come into the fore. Right now, our portfolio is kind of a mix. We have some companies with big established resources. We have some companies that are pure exploration stories, some that are a mix of the two, and some royalty companies as well. So we're kind of across the board in our Gold Newsletter portfolio, and really we let the opportunity kind of speak for itself. We don't toss away an opportunity because it doesn't fit our mold for the time being. We look for companies that have potential to at least double over the next 18 months or so as kind of a criteria for our selection.
Do you short either mining stocks, some mining ETFs, any commodities in general? Do you use any sort of short strategy?
No, I don't personally, and I don't recommend them in the newsletter because I'm not really that good at it, frankly. Uh, our key advantage is that we know just about everybody in the industry. If we don't know somebody in the exploration industry, we're only 1 degree of separation. We know somebody who knows them very well. So I kind of put that advantage to work, keep our ears to the ground, see who has an exciting prospect coming up, who makes an exciting discovery. And we get in early, typically very early, on some of these new discoveries and new winners, as it is in the sector.
How much of an overall net worth or an overall portfolio should be dedicated to mining, in your opinion?
Well, typically the numbers say at least 5% of a diversified portfolio should be dedicated toward precious metals and precious metals related investments. I think we're to the point now where that total probably should be around 10 or 15%. If you look at where things are going, if you look at the other asset classes that are at all-time or near all-time historic high levels, so they're more at closer to their peaks, and you look at precious metals and precious metals associated investments that are more near their long-term lower levels or bottoms, I think that mix should shift more toward precious metals and mining stocks. And even within that area, within that sector of precious metals, of course, there's a wide spectrum of investments, from physical metal ownership to at the other end, or toward the other end, the equities, the mining equities, and then at the far end, the junior exploration stocks in terms of risk and reward, and of course futures and options and the like. But we don't typically play on the short side because we don't have that kind of a trading service, at least right now, in place.
Brian, in your analysis right now, is silver more attractive or is gold?
I My long-standing advice to investors is that if you like gold, then you should love silver, because in a long-standing secular monetary-based bull run in the precious metals, where they're all rising, then silver will outperform gold. By the same token, of course, when that reverses, when gold is falling, then silver will fall more steeply than gold. Um, but silver is really kind of a non-expiring option on gold. If gold's moving higher, silver's going to move further and make you more money. So from a physical metal standpoint, I tell investors to have some gold and some silver and spread the risk, as it were. The same thing with the mining equities. You want to look at both sectors, but the silver equities are really they're leveraged to silver, and silver, of course, is leveraged to gold. So if you get into some really good silver equities, then you really have a high-powered uh, uh, portion of your portfolio working for you. So I do like that area.
Brien, can you tell people a little bit about the newsletter where they can check it out?
Absolutely. Gold Newsletter is, in fact, the world's oldest precious metals advisory. We were there at the beginning. My mentor in the industry, Jim Blanchard, started Gold Newsletter on the day that Nixon closed the gold window, and it was instrumental in returning the right of gold ownership to American citizens. So over the nearly 50 years since, we've made more money from more people in this sector than any other letter combined. We also hold the annual New Orleans Investment Conference this year. That's coming up from November 1st through the 4th here in New Orleans. And it is, in fact, the oldest investment event. Jim started that in 1974 to teach people how to invest in gold. And it has remained kind of the go-to area to find the best investments in the sector. Find tomorrow's biggest winners today. We feature all of the top experts, or the vast majority of the top experts in the sector, come to New Orleans, and most of them save their top picks for our audience. If your listeners want to learn more, they can go to goldnewsletter.com/webinar, and they'll be able to get Gold Newsletter actually for half price through that special link. And they'll be able to get a significant discount on registration for the New Orleans Investment Conference.
Hey, Brien, thank you very much for doing this. I love that the TV on the background in the meantime was saying Dow down 500 plus 600. So good stuff. Thank you very much. And sorry,
I probably should have turned that TV off, but good. I'm glad we added to the message that way.
Definitely. Thank you, sir. And we'll definitely circle back in a few months.
Perfect. Great talking with you.